Welcome back, Alpha Hunters. Okay, so we are going to continue on with episode 2 of this series, and basically it's going to wrap up the series. And we're going to look at what call should you buy for a bullish move. So I know a lot of new traders, when I've been helping them, they seem a bit lost when they are trying to find, what expiration and what strike price they should be looking for. So this is hopefully to give you some guidelines as to what you want to look for, okay? To get potentially the best performance or to just try to get the best bang for your buck. And other people, they talk about, 0.7, 0.9 deltas. You also want to go as far out in expiration as possible. And, if you've ever thought, is that true or is that right or is that correct? We're going to clear up some things today. But mostly this is going to kind of help you develop some strategies, and really the answer for what call or even what put you should buy is going to depend heavily on potentially on what strategy you're trying to do. But this just to kind of give you a little guideline as to what areas perform pretty well, or you can see what areas you potentially want to be into for whatever strategy you are trying to do. So let's check out the analysis. Okay, so we are going to be looking at this bullish move that started on 6/18/2021. And we're going to look at the option values from the close on 6/18. And then we're going to look at the option values on the close of September 2nd, which is going to be this candle right here on this close. Okay, so the time period that we're going to look at goes from this bottom right here, or that closing period, to this closing period right there. So that's the period we're going to analyze, and we're just going to see how well certain calls perform, and as well as certain puts. So I have gone ahead and dumped in the Thinkorswim data into these two tabs here at the end down here. Now this is the raw data that is dumped out of the Thinkorswim platform using the Think Back feature, and it really allows us to see how well certain options perform over a certain period of time, or certain positions perform over a certain period of time. So this is really good for doing some back trading analysis and those kinds of things. Now anybody can sign up for a TD Ameritrade account. It's free. You go out there, you don't have to fund an account to get access to Thinkorswim to be able to use some of these features. So definitely go out there and do that. If they have a lot of great tools to use for research. But the second and third tab, I had to take the fifth and sixth tab here, and I just had to move the data over and just kind of move it around a little bit. Kind of got rid of some rows as well, just to make it a little bit more lined up so that I can use some formulas to bring in all the data into the analysis tab. Okay, so here in the analysis tab at the top left up here, we have some basic information on our analysis. So we have our ticker here, the SPY, the SPY. We have our beginning date of 6/18. We have our end date of 9/2. We have our stock price closing on those days of 414.92 and then 453.19. And then we have a move percentage of 9.22%. Okay, and it takes 53 trading days for this move to happen. Now the option values that we are using are going to be the mark for the close of business. Now if you don't know what the mark is the halfway point between the bid and ask spread. So for the options, as they have the bid and ask spread, it's directly in the middle. Okay, so that's the value that we are using here. Now the options that we are considering here is going to be all monthly expirations after the end date. So anytime after 9/2, if there's a monthly expiration, we have those laid out here. And things that are included are going to be the strikes that not all expirations have a value for. Okay, so for example, this 195 strike, if it only had a value here for September 17 and it didn't have a value out here for the rest of these, I went ahead and deleted all of those rows and all those different strikes. So we are only seeing strikes and expirations where there's a value for each one. Okay, so that is what I have gone ahead and excluded. Now don't worry if you think that excluding certain things you're not going to be able to get the value out of the analysis. You will still get to see the value out of the analysis. I promise you that. So I did do this analysis when I was in college, so I do kind of know already what I was expecting when I was going to do this, but I haven't done it since college. So I wanted to put this out there in a video just so that you guys can see it. So this section right here, this is going to be the returns percentage section. Over here is going to be the beginning value section. And then over here is going to be the ending values. Okay, so these are more of the formulas that are linking to the second and third tabs to bring in the values. So don't really worry too much about that. It's going to be mostly this area is where you can see what options performed really well. So obviously the green areas are the options that we really want to pay attention to. Those are the areas where the options perform the best, okay? Now another thing that you want to notice is this gray shaded area and these positive percentages. These are in the money strikes, okay? That's what it's telling you. It's telling you what percentage in the money this strike is. So this 330 is 20% in the money, and it's highlighted gray. If it's not highlighted gray, that means it's out of the money, and it'll most likely have a negative percentage. Okay, so this 455, it has a negative 10% out of the money value to it. And if you do want this file, feel free just to go over to the Discord and go into the analysis and data tab, and you will see it down here as the best call option for bullish moves, okay? The other one that's also in here is the best put option for bearish moves. So you can definitely grab both of these files and play around with them, figure out what kind of strategy you can kind of come up with the sweet spot to kind of optimize out strategies and figure out what options you want to play with in certain strategies. The other thing in this file is down here, there is the return for the puts, okay? So all the puts data is in here also, and this lets you know kind of what performed poorly, worse than other areas. And obviously you can see there's a lot of negative numbers on here. So, you know, in a bullish move, puts are going to go down in value. So that's why you see a lot of negatives here. Okay, so this will be able to help you out on kind of how to position maybe some other strategies if you're trying to do some neutral type strategies and stuff like that. Okay, but what we can kind of gain out of this is we can see the areas that perform really well during this bullish move. And really on this near expiration, this September 17 expiration, it's really in that 4 to 5, 6, 7, 8% out of the money type zone. These all did really well. And you can kind of see here that as you go farther out in the expiration, the options that perform the best go a little bit farther out of the money, okay? So this is typically why I do like to go a little bit farther out of the money in my options. I don't typically like to go far out of the money, right? Because if you get into one of these and you don't get enough time for the option to get to your price target, well then you want to, you know, take a loss, and we don't want to do that, right? So what's the difference between, you know, buying this option and then maybe going out a few months and buying this one? Well, one of them lost almost 100%. This one made 230% return. So definitely give yourself plenty of time. There's no problem with giving yourself plenty of time. One of the biggest issues people have with options is not giving themselves enough time. Give yourself plenty of time, okay? And if you don't have a good time target, then definitely give yourself more time than not, okay? I know some people will tell you go as far out as possible. I'm not telling you to do that. In many instances, that's not like the best way to go about it. But if you're thinking that there could be a move over the next 2 to 3 months, but you're not really sure, you think it could last maybe 5 months, well then just go out like 7 months. Go out 7 months and you'll probably be fine, okay? Give yourself some time, but you definitely don't have to go as far out as possible. So if you do your analysis and you set up a good price target, you set up a good time target, and you know, you go to the options chain, and then you look through the options chain, and there's dozens of different expirations to choose from. And then once you open the expiration up, then you have dozens to hundreds of potential strikes to choose from. So this is just where trying to simplify it, trying to show you, hey, where to quickly you need to go to potentially get to the option you want to get into a trade. Because the last thing you want to do after you figure out your price target, your time target, is to not be sure of what you're trying to do or pick the wrong expiration, the wrong strike price. You want to have conviction in what you are trying to do with your trades. And you want to back up your trading thesis with, you know, actual data that supports what you're doing is the right thing to do. Okay, you're going to make the best bang for your buck. You're going to have the least amount of risk, and in the long run, growing your portfolio. Okay, because that's what we're here to do. We're here to grow our portfolio. Now, another thing you'll kind of notice is you get some one-offs right here. You see this like green box that's definitely more green than the ones around it. These are going to be some pricing anomalies. I'm not really going to show in this video how to take advantage of these kinds of situations. There are a lot of situations like that in the options markets to where you can take advantage of pricing anomalies that you can find like this, okay? But feel free to use this data. You know, you can pause the videos and just kind of look around at whatever spot. That way you can see potentially how things played out. But anything that was like a 0.7, 0.9 delta, you know, it's going to be like all this stuff is very underperforming for what some of the out of the money options kind of did down in this area. So some of these deeper in the money areas that I know a lot of people have seen on videos and other educational material, like where you want to buy some options, you know, 0.7, 0.9 deltas, you know, typically that's not right. You know, people just heard that and they've just always gone with it, but it's not really the best way to kind of go about positioning for your moves, okay? Because the other thing is these options are much more expensive than these options. So it requires a lot more capital. So you have a lot more capital up front at risk, and you're not even getting the best bang for your buck. So feel free to use both the files. They're both out there. You can definitely use the call and the put ones. You can combine them to see, you know, what strategy, where to position for bullish moves, where to position for bearish moves. And there is a lot of great analysis that can be done here. So if you appreciate the analysis, give this video a like and let me know in the comments below kind of where you prefer to position your calls or put options. You know, do you like in the money? Do you like out of the money? What's kind of your rationale for that? I'm just kind of curious to see what kind of people think, what they've kind of done. You know, you always done it that way, you were taught that way, you have another way to look at this kind of analysis, feel free to let me know. Alrighty, take care, Alpha Hunters.